The best of Money Matters. The Big Story.
Welcome to The Big Story. I'm Hongbin Jeong. BlueSG is hitting a pause. From tomorrow, the electric car sharing company will shut down until 2026 when it promises to come back with a shiny new fleet and upgraded tech. The announcement of this suspension of all operations came just 3 days ago, catching many by surprise. In the meantime, around 250,000 subscribers will lose access to Singapore's only point-to-point car sharing network. Behind the scenes, staff are being laid off and operations have been significantly streamlined. BlueSG says this is a strategic reset, not a shutdown. But when a company pulls the plug this fast, what does that signal? What kind of impact does it leave on the people behind the wheel? And what does it mean for the future of shared mobility here in Singapore? Well, joining us today to share more is Terence Fan, who's Assistant Professor of Strategy and Entrepreneurship at the Chian School of Business at SMU. Hi, Professor Fan. Welcome to the show.
Thank you for inviting me.
Thank you so much for joining us. Well, Professor, why did the sudden winding down of BlueSG's operations come as a surprise to many?
Well, because it kind of has been in business for a bit. I think it was first started by Bolloré from France in 2017. And that seems like eons ago, that's before COVID. And then, it operated for a few years without any issues. It scaled up very quickly. So people thought at least, the service should have the basics to continue. And so all of a sudden, we hear it being wound down. And I think it's a very short notice as well, just before the National Day. So I think that's a little bit of a surprise.
Right. I mean, BlueSG users, they were only given 4 days notice before the service shuts down. Does this abrupt, move raise more questions or speculations about the state of the business?
Yeah, it certainly does, because we can see that some of the vehicles that they use is a very one-off production for this particular company in Europe. And then it's not something that you can go to the market in Singapore and buy, even if you like it very much. So it's sort of specially made, and then they transported a bunch of them here in Singapore to start up the operation. And then in a few years, I think it was in 2021, this is like 4 years after they came into Singapore, and then they actually sold off this business to GoBell. So usually if a business generates a lot of money, the parent firm may want to try to keep a hold on that or maybe try to grow it or modernize it, from time to time. But the point was actually it just was let go. So that could be a signal that maybe either the parent is refocusing some of the investments elsewhere, or maybe that the business as a whole is not generating so much cash that the parent cannot let go of it. And then, of course, the local firm here, GoBell, bought it. And then that was in 2021 when we were still in the depth of COVID. Now things have resumed. And then we hear the sudden announcement. So if this business was not as a money spinner as otherwise it might have been, then the same could also, precipitate GoBell's decision to abruptly shut it down. So maybe, it's not generating as a huge amount of cash as they wish. And at the same time, as the fleet ages, which these cars could, because they are used fairly intensively, presumably, and hopefully, there are certain maintenance costs that they have to put in to maintain the fleet so that they are at a serviceable level so that people will continue to use them. And so if you have a business that is sort of just, getting by, and then you have increases in maintenance fees going up, every now and then, that doesn't bode well if, for example, for some reason suddenly you found out that, there's an unexpected maintenance issues or cost, and that may lead to the firm sort of resigning to say they would not, want to put the public in risk, and they would rather not spend the amount to upgrade the fleet anymore. And that could have been sort of behind the short notice. Of course, unless we're part of the management team, it would be difficult to know exactly why, but these are the reasons I think very plausible, and it's sort of very sensible that this would happen. Yeah, the question is if the firm actually has a huge following, has a huge amount of booking, is going to earn a lot of money, then maybe it may want to try to tide over the period of, between the shutdown and the purported sort of, reopening next year, which they also claim it would happen, but they chose not to. So there must be some cost and then maybe a lukewarm kind of revenue situation there.
Okay. So, what does this also mean about the car sharing services landscape here in Singapore?
Well, car sharing has been growing tremendously. I think it sort of happened, the early entrance happened like more than a decade ago. There were like some car clubs and so on. But now in the past few years, there have been so many locations where one can pick up and return a car sharing vehicle that it's very difficult to live in any estate in Singapore. And within 1 or 2 kilometers, you don't find any of these. It's actually hard to think of that. So there's so many of these locations that, meant that the growth has been tremendous. And typically when the growth of the capacity is tremendous, the question comes about whether the demand is catching up. And because it's not just one firm, there are like several firms. So there may be some sort of an industry shakeout or some firms that, don't perform as well, or maybe they don't expand as much to be so ubiquitous as other firms. They may feel like they are competitively disadvantaged and they may see very little way out of this, so for them exiting the industry or maybe selling the business to another firm, if that's possible, is a viable way out. We happened, I don't know if you remember, years ago we had this bicycle sort of bonanza as well, a lot of share bike. So these things do happen as the industry sort of try to figure out what the demand situation is and try to make sure their services and products are ubiquitous enough that they're convenient for consumers. And this is part of the adjustments.
Right. Well, BlueSG has said this pause is necessary to redesign the service from the ground up with a new fleet, more drop-off points, and improved tech. But which of these improvements are really needed? I mean, are there any common issues cited by users?
Well, actually, BlueSG is one of the few players that actually allow people to take out the vehicle from point A and then return it in point B. But judging from what you're saying, they're going to rejig it. And judging from what they're saying, it seems like they want to up the game a bit. So it could be maybe the fleet has aged somewhat, or maybe the original fleet needs to be revamped. Maybe they have new generations of EVs coming online, which are now cheaper, by the way, and more user-friendly and feels more modern. So I think that could be a combination of reasons of both new vehicles coming in and competitive forces, by other car sharing firms in Singapore. And the fact that, they may want to change the model a little bit, because the fact that people can take the cars from point A to point B means that at some point when they really want to go maintain the certain vehicles, they may not be what they would expect them to be. So there's a little bit of adjustment on their side in real time that they face. So I think that could be part and parcel of what they may try to do. But until they actually unveil the new service next year, we won't know.
Well, I mean, BlueSG is sitting on nearly 1,000 electric vehicles and over 1,500 charging points. So what happens to all that infrastructure while the company is offline?
That's an excellent question. It depends on the agreements that they have with the car parks, and where they are. Some of these are sort of within certain car parks, so they will have some individual agreements. But as long as these car parks are still designated for BlueSG, they kind of have to keep paying their version of rent, I would expect. So unless they think that 26, next year, the plan actually is not going to come through, then they would try to let go and get out of these. But I think if they want to actually come back, I wouldn't think they want to relinquish, basically give up all these parking spots. There are some prime parking spots in prime areas of Singapore. But, I think their calculus is that it's worth paying the rent until the point that they actually can restart the operations, rather than paying the maintenance fees or, trying to resolve the maintenance issues, which may be a bit more difficult in a short amount of time. I think that's sort of what they might have calculated. But, I guess other car sharing companies can try to contact them and see if they can temporarily use some of the spaces. And we'll see how they respond. Because if they're keen on starting their own operations again next year, they would not want to give out these spaces. But once again, if they're really strapped for cash, they may want to, them on an individual basis, let other car sharing companies use some of the spaces and get some rent for them as well, right? So we'll see how that turns out. And that, of course, is also subject to the agreement between them and whoever owns that parking spot.
Definitely. Well, at its peak, BlueSG had grown its subscriber base from 140,000 to over 250,000 users. But it hasn't, disclosed how many of those are actually active. So who among those users are most likely to feel the pinch by BlueSG going offline? What alternatives do they have?
It's a very good question because not a lot of the car sharing companies offer this flexibility to allow users to take the car from one point and then return it in another. So those people who have booked, especially for the National Day, kind of holiday and events, they may have to kind of really redo their planning in terms of how they can go about their planned journeys. Having said that, Singapore does have a lot of options, including public transport and so on. So I think people will find a way. It's just that it may not be as they had wished. So once again, it sort of brings into line that, hey, you kind of put your trust in these car sharing companies, and all of a sudden they can turn around and give you a very short notice to say, okay, we're gonna stop our operation. So that's a risk that people kind of have to be aware of. And I hear that some consumer associations are also coming in to see if they can do some mediation. I think it's good for BlueSG to say also that consumers who have paid and will not actually get to use their cars will get fully reimbursed. So we'll see how that actually comes about.
Okay. What about BlueSG's current employees? I mean, they were talks about layoffs as well. How will they navigate through this pause?
Yeah, that's a very good question because if the operation is going to be halted, a fair amount of the employees won't have things to do properly. But I would still see that some core staff will still remain because let's say if there were maintenance issues with the current fleet, they still have to collect the the vehicles. They still need to either ship it off Singapore or, try to fix them. So there's something to do, but definitely the nature of the operation will change. And so, a fair amount of the employees may be let go. Now, we hope that when they come back next year, these employees will, once again, if they still want to be employed by or still work at BlueSG to, keep, to bring them back into the workforce, of course. But we'll see how that goes. And maybe they find better jobs elsewhere as well.
BlueSG's full relaunch isn't expected until 2026. I mean, that's a long time in a fast-moving market. So, Professor, how risky is this decision, though, to completely pause services until 2026? Could this essentially be a reset for BlueSG?
Yeah, it sounds like that's how they phrase it. It's going to be a new kind of BlueSG. So I'd imagine there'll be quite a few number of changes. I would hope that the cars will be in a much better condition as well. But yeah, you mentioned, is it a risk? Yes, because now people are going to think twice and say, hey, next time, do I still want to trust BlueSG?
Right.
And in the meantime, if they need to use another car sharing kind of company service, then these customers may actually be pulled into other ones and get to try other ones. And if they say, hey, maybe I'm okay with another company, they may not want to switch back to BlueSG by the time they come back in 2026. I guess their hope is that when they come back, they may launch some sort of promotion or some kind of, give people some special deals so that would be enough to entice the same group of customers back, and I guess they're betting on the fact that when you actually go rent these car sharing services, you are actually doing on a trip by trip basis. So as long as your planning horizon is probably not more than a month or two in advance, then maybe, by the time, just a couple months before they launch next year, hopefully they can launch all these dazzling kind of promotions to then entice people back. And I think that's what they are probably trying to bank on. But it seems like in the meantime, they're willing to forego this customer relations, they're willing to kind of just drop everything. I think, underneath there may be some issues, either with the vehicles or some operations that it's just very difficult or very costly to resolve in a short amount of time. So I think that's probably what precipitated it.
Will the service gap, though, create an opening for other mobility players to swoop in and take market share?
It is possible, but once again, because the notice has been very short, so I don't think people can mount a new company just because, in a few weeks' time, because it takes time to secure agreements to get the parking. And remember, these EVs need the charging facilities. I mean, you need some construction of these terminals. So I don't think we'll see new companies popping up, but rather the existing competitors, like they may scoop in and say, okay, let's see if they're going to if they can take more of the customers from prior BlueSG customers, and maybe they'll offer them some deals, can identify, yeah, I'm a BlueSG customer and so on. So maybe they can hope to gain by having more of this business. At the end of the day, car sharing company is selling a service that is perishable, because if an hour goes by and if nobody rents a vehicle, that hour's availability of that vehicle is lost. So I think the existing competitors probably welcome this move, and they're trying to see how much of an increase in business will get, because of this.
Right. Well, there's also concern among users that the relaunch in 2026 could come with higher prices. Could this be a chance for BlueSG to restructure its pricing model as well?
I mean, if one of the reasons for them to stop the business now is because they're not making a ton of money, I would expect them to, adjust, some of the rates, if not more, or maybe lower the costs, maybe with some newer vehicles that have lower maintenance costs and lower operations costs and so on, so that the new relaunch business will be more viable. But at the same time, because they're not the only one in the market, there are several other ones, and others also have hundreds, if not thousands of sort of car sharing locations for these vehicles. So I think the market will have some discipline, that they won't be able to price too much higher than the other competitors. Of course, the other competitors may adjust now and say, hey, with BlueSG gone, can they also try to raise the price during peak times and so on? So that's also something to watch out. So maybe price hikes don't have to materialize until next year. Maybe we're already starting to see that as soon as they officially go offline, right? But I would also say that because the demand for these car sharing services change from day to day and also from one hour to the next. So it may be easier for people to be priced out in certain hours, to think about either starting your journey a little bit earlier, before the peak, or maybe ending it, a bit later, after the peak time, so that you get lower rates, but you can still kind of do your thing with the vehicles.
Definitely. Well, BlueSG was launched back in 2017 as the first electric car sharing service here, and as part of LTA's, pilot program for a national level electric vehicle car sharing initiative. Professor, almost 8 years on, how would you assess the success of that pilot? Is there still a viable future for EV-based car sharing here in Singapore?
A lot of that is chicken and egg, because earlier on, the issue was like, if these vehicles are not ubiquitous enough, then it's very hard for people to access them and therefore to use them. And I think in 8 years, since that time, we have seen a really, really impressive growth in the locations all around Singapore, over thousands of them, counting all of the service providers there, that is now ubiquitous enough to give people a chance to use them. So I hear some friends that tell me, why bother owning a vehicles when you can go rent one of these car sharing vehicles. So I think it definitely helps both, helping people think about not owning their own vehicle outright. And number two, at the same time, because the same vehicles can be used by multiple people, throughout the day, it may help increase the efficient, how intensely a particular vehicles can be utilized, in Singapore. And also because all these charges, the infrastructure that has to be built, it also helps, increase the demand and help companies who would provide services in building these EV charging terminals. And as they build these terminals for these EV car sharing companies, they also lower the cost for building more of these charging infrastructure for other vehicles like those we use in homes or in parking lots and so on. So I think in that sense, this whole effort has been very successful in getting us, the kind of infrastructure that we have, so that EVs now, in the last couple of months, we read that actually are, becoming one of the biggest sellers in terms of the categories of vehicles that are being sold. So I think that helps push the EV profile and the usage up a lot. And because, now people also get to try these EVs and they don't feel like, oh, they're such an alien kind of thing as years ago. So in that sense, I think it's very good. But in terms of the dollar of profits that people can get out of the industry, is still not clear, because a lot of these companies, most of them are, if not all, are actually still privately owned. So we don't know yet if in terms of the investment returns, that whether they are actually bringing that to the investors at this point.
Okay, and looking ahead to 2026 as well, Professor, with BlueSG promising a smarter and more reliable platform, what will ultimately determine whether this bold reset becomes a comeback?
Well, it really depends on what they have to offer, because so far what we have is just a bunch of word salads that we have. So we have to really see what that means. Does that mean that the vehicle's interiors feel newer, feels like they're more reliable, there are features that are actually making them even more user-friendly and so on? So I think we will actually have to see what they have to offer and what the competition also has to offer, because we're seeing in general in the marketplace a lot of EVs now being sold outside of Singapore at prices that previously just have been unprecedentedly low. So while BlueSG is revamping, other competitors of BlueSG may also try to up their game a little bit. So we'll have to see how BlueSG's offer matches up with the other car sharing companies when they actually do the relaunch. We'll be keen to see what they have to offer then.
Definitely. Well, thank you so much, Professor, for your time and your insights today.
Okay, thank you very much.
Thank you. That was Terence Fan, Assistant Professor of Strategy and Entrepreneurship at the Lee Kong Chian School of Business at SMU. This has been The Big Story with me, Hongbin Jeong.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.